All
Sorry.
right, John. Thanks for joining me here. This is our first episode of Behind the Scenes with Markman, talking about the markets and what you think about them, so our customers kind of know a little bit more about what's going on in the scenes with us. Last week was quite an interesting week, down 4 to 5% overall. Lots of interesting things going on, but none of that really matters. What matters is what your thoughts are. What are you thinking on the market? What were your thoughts about last week, and
Well,
what's going on with you?
in my letters for the past month, I've been saying that I expected the market to fall into late March and potentially into early April, and that's what the reasons I've been holding off on recommending individual stocks because my research showed quite clearly that there'd be a weak spot into March, maybe a sharp decline into the end of March, and then a rebound starting somewhere in the first to second week, maybe the third week of April. And
Oh,
I,
okay.
So, in that environment, I wasn't really willing to recommend to our customers that they be in individual stocks because it's going to be not just a stock picker's market, but really a kind of a market where only a small percentage of stocks work for individual reasons. I'll give you an example.
Oh, okay.
Last week was the worst week of the young year for
Really?
stock. Yeah. But well, yeah, Joe. I mean, the beginning of the year, we had an incredible move up into February 2nd, from January 1st to February
Oh.
2nd. Nasdaq was up like what, more than 15% in a
Mm.
short period of time. Mostly because all the losers from last year had been sold heavily into December, and people were picking them back up and rallying them into the beginning of February. But since February, the market's just completely tipped over. In fact, the market has gone from the S&P 500 has been gone from 8% from January 1 to February 2nd,
Yeah.
and it's now negative for the year. So it's been a massive move
Wow,
down.
that's a huge move.
And I feel great that I managed to tell our members that to expect that ahead of time. And now but now I think if it weren't for the fact that we had this major bank failure in Silicon Valley, I'd be really very optimistic because I feel like the research showed that we'd have this sort of flat spot at the end of March and then a decline into the beginning of April, and then kind of a really strong move higher from April on into May and June. But now this bank failure has thrown a monkey wrench into the works, and it's a little bit harder to figure out exactly how individual stocks are going to maneuver in that new environment.
Yeah, that makes sense. I guess this is more for me then, but I'm not really sure how this works. Like how are individual stocks tied to this bank? Are some of the stocks holding some of their money at this bank, or what does the bank have to do with the rest of the stock market?
Yeah, well, this bank held a lot of cash,
Mm-hmm.
the operating cash for startups, but also
Mm.
companies that were not startups anymore. For instance, Roku announced that Roku, the
Yeah.
video streaming player, they said that almost all their cash is at this bank, and so there's dozens and dozens of companies that are in a very similar situation, and if they can't access their cash on Monday, they're not going to be able to pay their employees. You may have this like wave of layoffs in Silicon Valley, but also elsewhere, because I really operate under the cockroach theory. Cockroach theory is you see one cockroach, there's going to be more, and it's extremely true in banking. Bankers are
Oh.
the most unimaginative executives, has the most unimaginative executives in the world. I mean, they are the worst in terms of like follow the leader. And if a bunch of banks put all their, knew that a lot of companies knew that Silicon Valley was the repository of all their cash, then they would do the same. So
Okay.
I think you're going to have a real contagion effect. Contagion meaning harm that was done to Silicon Valley Bank and is going to be done to startups in Silicon Valley will probably spread throughout the country. Because, as I say, bankers do what other bankers do. They don't. There's very few innovations in banking, and so I think there's a real possibility of an epic event coming up this week and maybe even into next.
So,
But
so do you think other banks are going to fail as well then, because they're doing the same practices the Silicon Valley Bank was doing, or is this or were their practices kind of in a standout?
I think we're going to see that there was a lot of banks doing the same thing as Silicon Valley Bank was doing, which is holding a lot of their money in treasuries,
Hmm.
and then when it comes time for them to, let's say that a large customer wants their money back. Well, they don't just have cash hanging around; they have all the money that they've been collecting in treasuries. And treasuries, as the as the Fed has been trying to raise rates, prices move inversely with yield.
Yeah.
So yields and interest rates have gone up, the price of treasuries have gone down. And so the Silicon Valley Bank's real trouble was that when they tried to sell their their bonds to make good on the request for cash, they lost a lot of money on these bonds, which had only had paper losses up until now. Now they got real losses.
Yeah.
So that's really what brought the bank down. They tried to make cash by selling their treasuries. The treasuries were so low priced that they had to sell at a big loss, and that was not in their game plan. So
So
once that happened, the whole thing just collapsed.
So you're saying, despite this very, very minor setback to the overall banking industry, it could be a great time to enter back into the market, but because of this, we kind of need to wait you're kind of waiting to see how this plays out, to see what kind of Rube Goldberg effect it has on the rest of the financial markets.
Well, yeah, I mean, the banking system is dependent on confidence. And who gives confidence? The Federal Reserve really gives confidence.
Yeah.
Because in past years, in past crises, when the chips are down, people expect the Fed to step up and promise that they'll make everybody good, particularly by lowering interest rates. And so, but at this time, the Fed has had a whole other battle going on. It's just like, to raise interest rates to quell inflation. Now the Fed's going to be really pressured to stop worrying about inflation and worry about a major bank contagion that could just incur huge losses throughout the United States and even into Europe.
Wow. Okay. So I did see somewhere that they were FDIC insured up to 125 billion, but that their losses were closer to 200 billion. Is that delta the 75 billion between that? Is that what they were asking Yellen to bail them out for? I saw Yellen made a statement basically saying, "We're not bailing you guys out. You're done."
Well, so yeah, Yellen was a former Fed official. She was
Right.
head of the San Francisco branch of the Fed,
Hmm.
and now she's the Treasury Secretary for Biden. So she doesn't have direct control over the Fed. The Fed's basically an independent organization outside of the regular banking, outside of the regular.
Oh, okay.
She can't tell it what to do. She can always sort of she can talk and she can offer her opinion, but she can't do anything. And so it's really going to be up to the Federal Reserve the Federal Reserve and other officials to decide whether they're going to put aside their inflation fighting for now,
Yeah.
worry instead about this bank.
Okay, that makes sense.
I mean, Valley Bank was the 16th largest bank in the country. I was much bigger than I expected. I mean, I've observed Silicon Valley Bank for years, and it's always been considered to be a good operation. But I didn't realize it was the 16th largest bank. That's a big deal.
Yeah, that's huge. That's huge. I actually didn't know it was that big as well. I kind of thought it was like more of a local bank, but just had a lot more prowess because it was in Silicon Valley. So different scale there for local. That makes sense. So what else is on your scorecard this week, John? What else were you looking at besides the fact that this bank might really push back our recovery?
Yeah, really. This week was a huge down week. It was
Yeah.
pretty bad in the market, but there were some individual stocks that did well,
Mm-hmm.
and they're all in individual stories. General Electric, GE,
Yeah.
was a massively important stock in the 1990s. It went from like 5 to like 200, and it was under the auspices or the management of a guy named Jack Welch,
Mm-hmm.
but when he retired, a lot of the shenanigans that he had pulled in order for GE to do well in that period fell apart. And an example, GE was mostly known for GE was originally Thomas Edison's
Yeah.
company. the late 19th century, and it was a conglomerate that had mostly industrial interests. They sold jet engines and light bulbs and
DC current.
uh, turbines and all kinds of stuff like that. But when Jack Welch took over, he really wanted to diversify them, and so I don't know if you knew this, but GE at one point bought NBC.
I did, only because of the show 30 Rock.
Exactly. 30 Rock mocked GE's ownership of the entertainment giant for years. It was hilarious. But so in the 2000s, when we had the dot-com crash, people sort of expected GE to do well, but it didn't. It did very poorly, and came all the way back down. And now it's under new management, and they've been diversifying. I'm sorry, they've been divesting themselves of a lot of projects that were not really related to what they consider to be GE's main focus. And so they shed a lot of their holdings. One of them is this company called GE. I think it's
Healthcare?
GE Healthcare, exactly.
Yeah, GE Healthcare. That was a pretty big one in our letter this week. At least made the top stocks.
Yeah, GE Healthcare, and I was I knew that they were spinning it off. I didn't think it'd be a big deal because everyone knew that they were spinning it off, but it has been a big deal both for GEHC and GE itself. So that's really one of the things I found the most interesting this week was this notion that everybody knew GE was spinning off this healthcare unit, and so I expected it not to be a big deal, but it was a big deal. Sometimes you just don't know.
Yeah, that's wild. Is it? I know one of your big themes for the upcoming decade is healthcare stocks. Is GE Healthcare now on your radar, or is that one kind of the ones that you're kind of writing off before the spinoff?
Yeah, we haven't really seen a full quarter from them yet as an independent company, but I'm going to be, as soon as they do release their next earnings results, I'm going to be looking at it very carefully. I mean, they've been a great innovator throughout the years.
Yeah.
And if you go into a hospital, you'll see GE MRIs and all kinds of incredible equipment that GE is responsible for. So I'm interested to see exactly what they plan to do, to grow over the next 10 years.
There's a 30 Rock joke to be made that not just the microwaves are GE at the hospital, but anyways.
Probably true. Yes, there were some other stocks that did last year that were kind of surprised.
Yep.
Intel, the big chip giant.
Mm-hmm.
Always mocked because Intel has been behind the curve for like decades. Even though the chip industry has done extremely well, Intel just cannot get out of its own way, and they've had one leadership change after another. But this week they came out with an earnings report there was some brokerage analyst report that was very positive about what Intel is doing, and Intel was the third best stock this week. So
wow. This might be a naive question, but where does Intel manufacture their chips? Are those?
They have manufacturing plants all over the world, but but one of the main places they do it now is in Oregon and Arizona.
Oh, really? So they have one of the bigger, within the country, manufacturing plants then?
Yeah, I mean, obviously, like everybody else, they have plants in China, Vietnam, Malaysia, but they're trying. They're like a lot of other chip makers. They're being incented by the government to have their manufacturing operations centered in the United States. The government is giving them incentives to do so. So I think you'll see more and more of that. Looking at some other stocks that did well this week, again, it was like one-offs. CMG, Chipotle, Mexican Grill. Yeah, it's the fourth best stock this week, up 2.7%.
Wow.
Are you a Chipotle fan, Joe?
So I'm actually pretty emotionally tied to this one. I don't eat out very much, but when I do, it's a quick Chipotle meal because it's normally the freshest and the easiest. Their quality is really slipping.
I agree.
And their portions have gone way down. But again, I guess once you have a brand where people are like, all right, I guess it's the least processed fast food or quick service food out there, you're still going to go there. So they maybe have a little bit. I don't know. I'm a little conflicted by that. I feel like they definitely shouldn't, their stock price should not be going up, but maybe it's a good call for the shareholders.
I know. On an anecdotal level, Ellen, my wife, is an incredible cook, and we have great meals every day that she makes. When we go out on the road, we get to have some fast food. You can try some different and not so good for you. And one of my old favorites was Chipotle. But the last time we went there in Paso Robles, California, on our way down to Palm Springs, it was horrible.
It's not
So,
good. There's definitely other ones that are worse than others. All right, so Chipotle did very well this week despite their decline in quality.
right. A lot of unusual stocks did well this week. Ulta, do you know them? They have makeup.
Oh yeah. I totally do. Yeah, they were one of the pioneers of digital advertising. At least one of the first to really kill it in that category.
Yeah, well, they've done extremely well. I mean, that stock's up like 5,000% in the last 10 years. And it's hard to say that they kind of flew under the radar because obviously they did extremely well. But it's not the stock you were looking for to do well. So I have been looking at them, and I do like them on pullbacks as well.
Okay.
Very well run company, and as work from home blends into like back to work, women and men, I suppose, are going to be using a lot more cosmetics. When you're working from home, not necessary, perhaps. Not an expert, but I believe that's true. And so I think you're going to see the cosmetics companies like, as well as Estee Lauder, do a lot better than they have been over the past couple of years.
That makes
Well,
sense.
another area that has done pretty well this week and this year, surprisingly, is the home builders. D.R. Horton have done pretty well, and they're sort of a value play right now, and a very popular sort of contrarian play on the economy. So I think we're going to be looking for those to do well as well. I think I'm going to be recommending those when it comes time. And yeah, it's just the other group of stocks that's done pretty well lately is cigarette stocks, particularly Philip Morris (MO). I mean, cigarettes are the classic consumer staple, right? If you think that the best thing you can do for your customers is make them addicted to your product, well,
Yeah.
that's the business model of the cigarette makers.
So are they coming back in vogue? I did see last week for the first time in decades, maybe 3 decades, that vinyl sales surpassed CD sales for the first time. Yeah, that happened last week, which actually kind of makes sense because vinyl, better sound quality, sticks around, at least gives you a little bit of more of a vibe. With CDs, I don't know what you're gonna do with that, considering you can get the same quality from streaming music. So do you think it's just like it's cold cigarettes are coming back in, vapes are out, or is
I
it
don't know.
really just more vape sales?
Have you seen the new series on Prime Video, Amazon Prime Video, called Daisy Jones and the Six?
I
Daisy
have
Jones.
not. No.
It's a movie. It's a streaming version of a book by the same name. And the reason I mention it is I don't think I've seen so much smoking in a TV show in years. I mean, these guys, the actors and actresses are constantly smoking, and I couldn't help but wonder if there was some kind of a connection there.
Okay, connection there. I don't know.
And
Yeah.
also in the mid 1970s,
Yeah.
no CDs, no streaming music, and it's all done on all the music that is done in the show is done on
Vinyl.
turntables and vinyl.
Yeah. So maybe this show is directly responsible for cigarettes and vinyl's resurgence.
I love this show, by the way, because it takes place in Los Angeles in 1975, in the mid 1970s, which is my era. That's where I lived.
Yeah, that makes sense.
I graduated from high school in like '76.
Right. Okay. Yeah. So this show is great for you then, full of reminiscing about when you grew up in the time period.
The thing that made me chuckle was that one of the characters pulls up in a station wagon, with the fake wood along the side.
Wood paneled.
Today it would be an SUV, but back then it was definitely
Yeah.
height of the era for the station wagon.
Well, hopefully, if the show is really such a trendsetter in cigarettes and vinyl is back because of it, which we can confirmly say, hopefully wood paneled Wagoneers will also come back as well then.
Probably you a Jeep. I think that if anyone's going to do it, it's going to be Jeep.
Jeep, yeah, they bring back the Wagoneer. I mean, they did bring back the Gladiators, so maybe the Wagoneer's next.
Yep.
Awesome. Well, John, is there anything else on your scorecard for this week, or anything behind the scenes we should know about? That was kind of a lot.
Yeah. Well, as I'm going to be starting to provide more individual stock recommendations for the letters, as well as ETFs for our precision ETFs letter. But the precision ETFs letter, as you know, is both for ETFs as well as ETF options, and the ETF options we recommended in that letter have been doing extremely well.
Yeah, we just sold 26%, or sold our 3M puts for a 26% profit, which is Pretty great.
Yeah, that was on the technical side, and then on the precision ETF side, we had a great play in TLT, which is the 30-year bond ETF.
Yeah.
That did extremely well on Friday. We were able to get out for that first half, I think, with a 40% gain.
Yeah, 44.6%.
Then next week, if the market opens down or trends down a lot, you'll see those TLT options go up as much as, I don't know, I think they could double or triple in a couple of days.
Wow. Well, hopefully that happens.
That's why we lifted our target for those. The target was originally, I don't know, like $7, and we raising targets is something we very, very rarely do, but we did it in this case because anticipating trouble in the coming week.
Anticipating it. Well, I'm sure the Silicon Valley Bank definitely helped out there.
Yeah.
Well, that's awesome. Well, John, thanks for doing this. Hopefully we can do this every week. We'll get a regular release schedule going and get it out to you guys. Just so everyone know who ended up seeing this, these will be released one day after recorded. So this is recorded on a Sunday. It'll be released on a Monday. Well, anyways, this is Joe Markman and John Markman. Hopefully we'll see you guys again next week.
Take care, Joe.
All right, bye.